Let's break down Ethereum and see why it's become such a buzzword in the world of technology and finance. Ethereum isn't just digital money, and it's definitely not a traditional company. Instead, think of it as a decentralized global computer, one that anyone, anywhere can access and use to build new things. Launched in 2015, Ethereum is often described as Bitcoin's ambitious younger sibling. But while Bitcoin was designed mainly as digital gold, a way to send and store value, Ethereum set out with a much bigger vision: to become the foundation for a new kind of internet. Instead of just tracking who owns what, Ethereum's blockchain lets people build apps, run code, and create digital agreements called smart contracts, all on a secure, shared network. The fuel that powers this entire system is called Ether, or ETH. It's the cryptocurrency you see on price tickers, and it's what people use to pay for transactions and run programs on the Ethereum network. So, when you hear people talking about the price of Ethereum, they're really talking about the price of one ETH token, which can go up and down just like stocks or other cryptocurrencies. But the real magic of Ethereum isn't just in its currency, it's in what it enables: a new, user-owned digital world where anyone can participate, create, and even own a piece of the action. Imagine the internet, but instead of being run by a handful of giant corporations, it's powered by thousands of computers all over the globe, each one helping to keep things running and secure. Unlike Bitcoin, which is mainly about recording payments, Ethereum's blockchain can actually store and execute code. This means it can run entire applications, like games, marketplaces, or even financial services, without any central authority. This is why Ethereum is often called the foundation for Web3, a vision for a more open, decentralized internet where users have more control and ownership. So to sum it up, Ethereum is a platform, ETH is its native currency, and its main purpose is to let anyone build digital tools, services, and communities, without needing permission from a central authority. It's not just about money, it's about creating programmable infrastructure for the next generation of the web, where innovation is open to all. That's why some people see Ethereum as the future of the internet, while others remain skeptical, wondering if it's just an overhyped experiment. Either way, it's changing how we think about what's possible online. What can you actually do with Ethereum? Beyond just holding or trading the coin, Ethereum is a platform that unlocks a whole new digital world. It's not just a cryptocurrency, it's a foundation for innovation, creativity, and new ways of interacting online. Enter smart contracts, self-executing programs that run automatically when certain conditions are met, with no need for a middleman or trusted third party. These digital agreements are transparent, tamper-proof, and can handle anything from simple transactions to complex business logic. This breakthrough has led to the rise of dApps, decentralized applications that run on Ethereum's blockchain. Unlike traditional apps, dApps are open, borderless, and can't be shut down by a single authority. They're the backbone of Ethereum's ecosystem, powering everything from games to marketplaces. One of the biggest revolutions is DeFi, decentralized finance. Here, you can lend, borrow, or trade crypto assets without ever stepping into a bank or relying on a financial institution. DeFi platforms are open 24/7, accessible to anyone with an internet connection, and offer new ways to earn, invest, and manage money. Billions of dollars flow through these decentralized systems every day, and the numbers keep growing. The barriers to entry are low, making financial tools available to people who've never had access before. Then, there are NFTs, unique digital certificates of ownership, powered by Ethereum. While they're most famous for digital art, NFTs are also used for music, event tickets, in-game items, and even digital real estate. They're changing how we think about ownership in the digital age. Ethereum's blockchain acts as a public ledger, proving who owns what in a world where digital files can be copied endlessly. This technology is giving creators and collectors new ways to interact and transact. But it doesn't stop there. Ethereum's technology is being used to track goods in supply chains, enable secure online voting, and even build new models for social media that put users in control of their data. Supporters see Ethereum as a digital Swiss Army knife, versatile, powerful, and capable of disrupting industries from finance to art, logistics to entertainment. Its real-world utility is the strongest argument for its value, as it powers a growing universe of applications and services. Ethereum isn't just something to buy and sell, it's a platform to build on, experiment with, and use to create the next generation of digital experiences. But whether all this utility truly justifies Ethereum's price is still hotly debated. The technology is promising, but the market is volatile and unpredictable. The possibilities are vast, and the potential rewards are huge, but so are the risks. Navigating this new landscape requires caution, curiosity, and a willingness to learn. Ultimately, Ethereum's future depends on how much people actually use what it enables, and how far its community can push the boundaries of what's possible. Now, let's talk about the price. Ethereum's wild roller coaster. It soared to all-time highs, creating overnight millionaires, then crashed just as quickly. Price swings are driven by news, upgrades, and the mood of the entire crypto market. When Bitcoin rises, Ethereum often follows. In 2024, Bitcoin's surge pulled Ethereum up over 30% in a month, but bad news or regulatory threats can send prices plummeting. Volatility is the norm. Fortunes are made and lost in days. Most trading isn't about using Ethereum, it's pure speculation. Many buy ETH hoping to sell it to someone else at a higher price. The greater fool theory. This creates bubbles, where prices detach from reality until the hype fades. The market is driven by emotion, not fundamentals. If you're in it for the price, expect drama. Ethereum's value is as much about psychology as technology. So, what's Ethereum actually worth? It's a question that sparked endless debate among investors, tech enthusiasts, and skeptics alike. Ethereum isn't just another digital coin, it's a platform for building decentralized apps, smart contracts, and even entire financial systems. But when it comes to value, things get complicated. Unlike stocks or gold, Ethereum isn't backed by physical assets, company profits, or government guaretees. There's no vault of gold, no quarterly earnings, and no board of directors making decisions for shareholders. Its value comes from what people are willing to pay. Pure supply and demand. The price can swing wildly, sometimes in a single day, based on news, hype, or fear. Traditional investors struggle with this, since there's no cash flow, dividends, or tangible backing to analyze. It doesn't fit into the usual models for valuing an asset. Supporters argue Ethereum's value is in its network, the technology, the developers, and the vast ecosystem it powers. It's a foundation for innovation, enabling new kinds of digital interactions and businesses. The more people use and build on it, the more valuable it becomes. This is the network effect. As adoption grows, so does the potential for new applications and users. But putting a dollar figure on that is tough. How do you measure the worth of a global decentralized computer? Without a clear anchor, price is driven by sentiment and speculation. News, rumors, and even tweets can send prices soaring or crashing. This makes Ethereum risky and unpredictable. For some, that's exciting. For others, it's a reason to stay away. Critics say the lack of intrinsic value is a deal breaker. They argue that without something tangible behind it, Ethereum could lose its worth overnight. Supporters say the tech itself is the asset. They believe Ethereum's real value lies in its ability to transform industries and empower people worldwide. The truth? Its value is as much belief as it is utility. It's a mix of hope, vision, and real-world use cases. That's why the debate rages on, and why Ethereum's true value might always be up for discussion. Ethereum's wild price swings and lack of intrinsic value attract big-name critics. Warren Buffett, for example, calls crypto rat poison squared. He only invests in assets that produce something. He argues Ethereum is pure speculation. You're just hoping someone else will pay more. Many economists agree, seeing crypto as a bubble driven by hype and FOMO. They point to past manias, tulips, dot-coms, where excitement led to disaster. Critics warn the market is full of scams, manipulation, and little regulation. They say this time is different is the most expensive phrase in investing. Their bottom line, be careful, or you could be left holding digital air. So, why do millions still jump in? FOMO, fear of missing out, is a powerful force. Stories of quick riches create a feedback loop. More buyers, higher prices, more headlines, even more buyers. Greed and social proof drive the frenzy. At market peaks, risk is highest. People invest money they can't afford to lose, sometimes on credit. Ethereum's volatility means huge drops can happen overnight. Many are just hoping to sell to a greater fool before the music stops. Some believe in the tech, but many are just chasing gains. The danger, when the bubble bursts, someone is left with big losses. Know what you're buying, or you could be the last fool in line. While speculators watched prices, Ethereum's developers pulled off a massive upgrade. The merge. In 2022, Ethereum switched from energy-hungry proof-of-work to efficient proof-of-stake. Now, validators secure the network by staking ETH, not burning electricity. This slashed energy use by over 99% and made Ethereum more sustainable. The upgrade also reduced new ETH creation, making it potentially deflationary. Developers keep improving the network. Recent upgrades have lowered fees and boosted scalability. More upgrades are planned, aiming for better security and user experience. These changes address major criticisms and strengthen Ethereum's case as a long-term platform. It's not a static project, it's evolving fast. The tech is getting better, and that's a big part of the bullish story. But the risks and challenges aren't gone. Crypto used to be a wild frontier, but now Wall Street is moving in. The launch of Ethereum ETFs lets investors buy ETH exposure through regular brokerage accounts, no wallets or private keys needed. This opens the door for big institutions and mainstream investors. The approval of spot Ethereum ETFs in the US was a turning point, bringing billions in new investment. Major players like BlackRock and Fidelity now offer Ethereum products, boosting credibility. Institutional money can drive prices up and make the market seem more stable, but it also means Ethereum is now tied to the broader financial system. More access, more legitimacy, but not less risk. So, is Ethereum a smart bet or a pure gamble? Honestly, it's both. The technology is groundbreaking, with real potential to disrupt finance, art, and more. Continuous upgrades and growing adoption show substance, but the market is also driven by hype, speculation, and wild swings. Warnings from experts like Buffett matter. This is risky territory. If you're thinking of investing, know the risks. Never put in more than you can lose. Do your own research. Don't just follow the crowd or viral videos. Think of Ethereum as a high-risk, high-reward bet on the future of technology. It could change everything, or it could crash and burn. The outcome is uncertain. If you invest, do it with eyes wide open. And remember, caution beats FOMO every time.